SpaceX is preparing to spend $60 billion to acquire a 2-year-old startup called Cursor. Cursor produces code-writing software. They do not manufacture orbital rockets, and they don't operate satellite networks. The timeline for this deal is highly compressed. SpaceX is rapidly organizing its balance sheet for an initial public offering arriving in June, creating intense pressure to finalize their corporate structure. Comparing internal valuations in this deal, after taking over Elon Musk's xAI, SpaceX values itself at $1.25 trillion. To justify this trillion-dollar valuation to investors, the hardware company is absorbing a massive software application to manage future data needs. Cursor began in 2022, built by 4 alumni from the Massachusetts Institute of Technology. They released a tool that uses artificial intelligence to help developers write code, and the tech industry adopted it immediately. In less than 24 months, the startup hit $100 million in annual recurring revenue. Top investment firms backed them with $3.4 billion in funding. But training artificial intelligence to understand and write complex software requires massive amounts of physical processing power. Hitting the physical limits of server capacity is known in the industry as the compute ceiling. Cursor hit that ceiling. Their founders acknowledged publicly that their growth was entirely bottlenecked by a lack of access to supercomputers. They had brilliant software, but lacked the physical hardware to run it at scale. That bottleneck is lethal when you share a city with aggressive, well-equipped competitors. Anthropic began pulling in massive revenue with a coding product called Claude Code, and OpenAI pushed their rival tool, Codex, into the enterprise market. Without heavy-duty hardware, Cursor's code would eventually be outpaced. To survive the arms race, they needed to secure either a $10 billion cash injection to buy servers or an outright buyout. Over the last year, Elon Musk initiated an aggressive push to wire artificial intelligence directly into SpaceX's daily operations. To do this, SpaceX bought xAI, and xAI has the exact opposite problem of Cursor. They possess immense physical infrastructure, including a massive supercomputer built specifically to train the heaviest AI models on the planet. But their software foundation cracked. Following a severe employee exodus, xAI's development stalled, and they fell entirely behind OpenAI and Anthropic in software capability. Musk admitted the failure directly, stating that xAI was not built right first time around, so is being rebuilt from the foundations up. The $60 billion offer is the mechanism for that rebuild. SpaceX is offering to buy Cursor to acquire its leadership and engineering talent, installing them directly into the xAI ecosystem. It is a mutual rescue operation. Cursor finally gets the supercomputer muscle it needs to survive the AI race, and SpaceX gains the engineering expertise required to operate its hardware. Securing Cursor's software fixes xAI's immediate development bottleneck right before the June IPO, but it serves a much more radical physical deployment plan. Artificial intelligence's greatest terrestrial constraint is the massive amount of electricity required to run silicon chips, which places a heavy burden on local power grids. Musk's solution to that energy deficit is to move AI data centers out of Earth's atmosphere entirely. By placing server farms in orbit, they can continuously harvest energy directly from the sun. In a letter to his employees, Musk laid out this philosophy directly. He wrote, "In the long term, space-based AI is obviously the only way to scale." This orbital infrastructure ties back to SpaceX's primary directive. Managing the logistics of making humans a multiplanetary species requires a high-capacity compute network that is not limited by Earth's terrestrial energy boundaries. The $60 billion acquisition of a coding app provides the software foundation required to push the artificial intelligence industry out of Silicon Valley and into the stars.